Good morning, Tuesday, April the 11th. Hope you had a wonderful Easter weekend. And this week we're starting with, again, I'm going to start with the bond yields. And today they're trading just over 3%. Last week they were just under, but they're still floating in that zone of about 10 basis points. So a little bit of stability there, which is positive. We'll see what happens tomorrow because the Bank of Canada has the third meeting of the year. And depending on that commentary, it may impact markets and possibly the bond yields as well. Most people are betting that tomorrow the Bank of Canada will leave the rate where it's at. So another pause, which again is positive. And then next week, hot on the heels of the Bank of Canada's meeting, is the March Consumer Price Index update. So let's keep our fingers crossed that the inflationary rate is declining. And I know it is in some areas. In some areas, it's higher, but overall, I think the trend is progressing the way we want it to. Some lenders are coming out with some rate specials right now. Again, that's largely linked to the time of year, just heating up for the spring market. We're seeing 5-year fixed in the 4.5% range, and then the 3-year fixed in the just under 5% or 5%. A lot depends on insured, loan to value, credit score, what have you, but those are some sort of general rates you can work with. Looking forward for us in the mortgage space or all lending in terms of guidelines and regulations, OSFI, the Office of the Superintendent of Financial Institutions, who is they call the shots. They make the rules. They act where they feel they need to. Currently, they're doing some reviews, and we're going to see the reaction to those reviews in the next few weeks, I believe. Some people may think that there's going to be deeper restrictions in getting people qualified for mortgages. There's also the option that's been floated about a bit with possibly seeing some higher amortizations come back into the market. So 35 or 40-year amortizations. That doesn't do a lot to help people pay down their mortgages. Does allow them to get in. And I think the upside to anybody getting into the market is clearly the appreciation of the asset. So long term, it's good, and of course, people would expect their incomes to increase as well with just the trends. That is that. Final thing I just want to touch on is the Purchase Plus Improvement product. So again, if you've got a client, you're probably familiar with the product, but if you want some further clarity to it, just feel free to give us a ring or send us an email. Basically, it allows the purchaser or the borrower to do improvements to the property in a window of time soon after completion, which will increase the value. A great product for those people that are looking to get into a property that might be a little in need of some repair or upgrades. And again, the upside is that the lender will allow you to work with a future value, if you will, on those improvements. So we can get into that further again with a phone call or an email. So leave you with this for the week and hope you have a wonderful one. Look forward to catching up on Monday. Bye for now.